2025 is going to be an absolute nightmare for Russia. How? Well, it all comes down to the economy. Putin's non-stop attritional war has affected his country's economy to the point where the ruble has completely collapsed, and that collapse means some serious economic issues are in Russia's future as we begin 2025. What's happening with the Russian ruble right now? And why does its massive decline in value spell the potential collapse of Putin's Russia? Those are just some of the questions we'll answer in this video. So what on earth has happened to the ruble? On November 27, 2024, Newsweek reported that the Russian ruble had absolutely collapsed to its lowest value against the dollar since Putin started his special military operation. The currency hit a new low of 107 against the US dollar the day before the report, and it kept getting worse from there. By November 28th, the ruble had sunk again, reaching 114 against the dollar, plunging past the depths that it found itself in March 2022, when the West announced its first massive round of sanctions against Russia. The collapse was coming for a while. The ruble had undergone around 2 months of consistent depreciation before it hit its new low point, and that depreciation is only going to get worse from here, as Russia's currency was expected to weaken further during the winter holiday season. Companies imported more goods into the country to meet consumer demand for that period, resulting in the currency becoming further devalued against the dollar. Russia's daily newspaper Kommersant summed up the mood in the country. It claimed that the news of the ruble's collapse resembled a war report, perhaps alluding to what it believes to be the true reason behind the issue. It's also advised its readers to buckle up your rubles, because even worse times are likely to be coming. Worst of all, for Russians who lived through the post-Soviet Union era of Russia, this collapse will ring massive alarm bells that Russia is returning to a time when its currency felt meaningless. During the 1990s, Russia was racked by economic chaos, with its currency being so devalued that hyperinflation meant that only those who had hard foreign currency had any chance of succeeding. Many everyday Russians saw their savings essentially get wiped out by rampant inflation. That may be about to happen again. The ruble has also cratered in comparison to where it stood over the last couple of decades. Sky News reports that the ruble used to trade at around 30 against the US dollar in the late 2000s. Even as recently as 2 years ago, it was trading at 60 against the dollar, following a recovery from its last collapse in March 2022. Things seemed to be on the up and up for a while. This latest collapse demonstrates that Putin's war-focused policies combined with Western sanctions are finally coming home to roost. Russia is teetering on the edge of financial collapse as we begin 2025. And we have to ask the obvious follow-up question: why did this collapse in the ruble happen? There are several factors at play, some immediate and others that have impacted Russia for almost as long as the Ukraine war has been ongoing. But perhaps the catalyst, and certainly the most significant immediate factor, is a new raft of sanctions the United States announced against several Russian banks. The announcement of those sanctions came from the US Treasury Department on November 21st, with several dozen Russian banks getting caught in the move. The sanctions predominantly affected institutions Russia uses to complete international payments, meaning the US was sending a clear message to Putin: we're going to stop you from trading with your partners as much as we can. Gazprom Bank was among the hardest hit of Russia's banks. The US had previously avoided this bank as a courtesy to Europe, reports Newsweek, as it was the bank through which European payments for Russian gas supplies were typically made. Europe as a whole has been moving away from Russian gas. The Council of the European Union says the share of Russia's gas pipeline in the European Union, or EU, imports dropped massively during the 2 years between 2021 and 23. That share stood at 40% in 2021. In 2023, it was down to 8%. Adding liquid natural gas, or LNG, imports to the pipeline gas figures saw Russia account for just 15% of the total gas the EU imported between 2020 and 2023. Norway and the United States have moved in to fill the gap left by this minimization of dependence on Russian gas, showcasing how Europe has moved away from Russia as its key energy supplier. Those European moves away mean Putin has less leverage as he continues his war in Ukraine, which is compounded by the collapse of the ruble against the dollar. Of course, these sanctions also make it harder for any other country to buy gas from Russia, meaning it's likely that we'll see the country's revenues from gas decline further. Not great for a Russia that needs as much cash as it can get its hands on to fund Putin's war. While these sanctions may have been the catalyst, other issues at play combined to cause the ruble's decline. In its analysis of the collapse, the Bell pointed out that Russia's decision to repatriate just a quarter of its foreign currency earnings rather than its typical half compounded the country's problems. Repatriation is the conversion of a foreign currency back into your home country's currency. Russia doing less of it led to a fall in the availability of the Chinese yuan and the US dollar, essentially leading to an overflow of rubles inside Russia. As one employee of a Russian bank puts it, everyone is sitting on rubles. There's a ton of liquidity, but nowhere to convert it. Why is this a problem? Russian investors and business owners would rely on repatriation to get their hands on dollars and yuan. which would then allow them to trade more easily with other countries. Now, banks in major and even third countries aren't working with Russia's banks, and particularly not with the ruble, because of the prospect of further US sanctions. In short, Russia's financial players now struggle to send funds to the intermediaries they've used for much of Putin's war, and they have less foreign currency with which to make their transactions. Trade slows to a crawl, and as the ruble continues to collapse, transactions become even more expensive. It's a vicious cycle that's causing major problems for the Russian economy. Add to all of this Putin having gone spend crazy with his special military operation. The Bell points out that Russia's state spending was around $14 billion more than expected during the fourth quarter of 2024. More spending means a higher supply of rubles entering the Russian system, devaluing the currency further. Russia's state spending has been spiraling out of control ever since Putin started his war. A huge chunk of Russian money is going toward funding the country's military. As the Stockholm Center for Eastern European Studies points out, security-related spending on Russia will account for between 40 and 45% of all state expenditures in 2024. We've also seen a rapid increase in defense spending between 2019 and 2024. In 2019, Russia pumped 2.997 billion rubles into its national defense. That figure is now 10.775 billion rubles, an increase of 359%. Some of that spending is natural given how long the Ukraine war has lasted, but therein lies the problem for Putin. His special military operation was only supposed to last 5 days. It's been nearly 3 years since that invasion, and Russia has been forced to plunge itself into a war economy that sees massive public spending on its military machine just to keep itself going. More rubles are needed. But more rubles means the currency gets devalued, and the great irony for Russia is that it's sticking itself into a cycle where it needs to dedicate even more rubles to defense, which continues the devaluation. And it only gets worse for Russia as we begin 2025. We touched on how US sanctions are going to impact Russia's gas industry, forcing its major energy players to find workarounds. That impact is accompanied by a long-standing set of problems that are limiting the flow of foreign currency into Russia. The constantly rising costs of cross-border transactions, past sanctions come into play here, drive up the cost of Russian imports. The Bell says that these higher costs place even more downward pressure on the ruble, accounting for its consistent decline over the last few months at least. That pressure isn't going away. Where the catalytic immediate issues force the ruble's cratering, this pressure will add to its decline over time. We've touched on sanctions just now. It's important to point out that it's not just America's recent sanctions against Russian banks that have caused the ruble's decline. The many sanctions the US and its allies have put in place throughout the Ukraine war are also finally coming to bear. Castellan tells us that there are currently 22,230 sanctions against Russia, with the US being the biggest contributor. It has 5,820 in place. Canada has well over 3,630 sanctions against Russia, with the EU combining to add 2,378 to the list. Some of those sanctions date back to 2014 and Putin's annexation of Crimea, but his special military operation really ramped things up. Over 19,500 of the 22,230 sanctions were put in place after February 2022. If pressure is being placed on the ruble due to lower levels of foreign investment, these sanctions are the major source of that pressure. Even the government has acknowledged this. The Kremlin says that the sanctions imposed by what it dubs unfriendly countries are causing high costs of living in Russia. Add supply shortages and labor challenges to the list, and you get production costs going up, with wages following suit, all in an environment in which the ruble is worth far less than it was before the war began. RSM US chief economist Joseph Brasuelas sums up the problem. "One would think 2 years of sanctions is starting to wreak havoc on the Russian economy," he commented upon the news of the ruble's collapse. In a later X post, he added that Russia now has an overheated economy that's struggling to support its war effort and exhausts its resources. And for as many unorthodox steps as Russia has taken to circumvent sanctions up to this point, the US getting harsher, as with its most recent bank sanctions, leaves Putin and his cronies with far fewer workarounds. Those sanctions also stem the flow of cheaply borrowed dollars into high-interest-bearing rubles, according to The Spectator. Yet another problem for a country that's desperately trying to make the most out of its cash reserves to fund Putin's war. And the worst of it is that there's not a whole lot that Russia can do about it as the country begins 2025. Russia has very few options left to stabilize its struggling currency. Tapping into the National Welfare Fund, which is essentially Russia's rainy day fund, is an option. However, that fund only contains 227.616 billion of Chinese yuan as liquid assets, with the rest being gold or otherwise non-liquid. And that's not going to do all that much, considering how much Putin is spending on his war. That fund has also been declining consistently since the beginning of the war. It shrank by about 324 billion rubles in July 2024 alone. Putin has tapped into this fund multiple times already to prop up the ruble during his special military operation, and it doesn't have all that much left to give. As Fortune puts it, the Kremlin's piggy bank for propping up the ruble is running low. That particularly rainy day umbrella now has a few too many holes. Russia's central bank has also tried to intervene to try and prop up the faltering ruble. It chose to halt all foreign purchases on Russia's domestic currency market for the rest of 2024. That will at least reduce the foreign currency shortage for a while. But Russia can't rely on non-market residents being active in its financial markets. As the Bell points out, those non-market residents and their trading used to help bring stability to the ruble during previous periods of volatility. Those people are gone now, so Russia can't use them as a buffer to stop the ruble from dropping even further. The only positive news for Russia in all of this is that a weakened ruble should lead to more funds pouring into the country in time for its budget at the end of 2024. Russia can essentially fake the numbers to make it seem like it's doing better than it is, though that influx of cash won't do anything to solve an economy that's now rotten to its core. The takeaway from all of this is simple. This year 2025 is going to be hell for Russia. The question now is simple: how? We can divide the answer into two parts, with the collapsing ruble set to have an impact on both the average Russian and Putin's ambitions for Ukraine. For the everyday Russian, we're already seeing the consequences of Putin's war. Toward the end of October 2024, a little over a month before the ruble broke the 100 mark against the US dollar, Russia's central bank was forced to hike interest rates up to 21%. That decision was made in an effort to curb the rampant inflation in the country that Euronews says is caused by Putin's massive military spending. The bank even touched on this, stating that growth in domestic demand is still significantly outstripping the capabilities to expand the supply of goods and services. It's here where we can clearly see the impact sanctions have had on Russia. Far fewer goods are coming into the country, despite Russia having found some workarounds. Putin's switch to a war economy isn't helping matters, as Russia's manufacturing base is now largely dedicated to making weapons for his special military operation, rather than products for the country's consumer market. Raising interest rates is a measure that central banks the world over use to curb inflation. With the ruble devaluing as much as it is, there's a good chance that Russia's central bank will have to break past the 21% mark. Russia's base rate is already at its highest since it was introduced in 2013. Going even higher means the average Russian will face even higher costs of borrowing. We'll also see businesses making decisions with a focus on future profitability, impacting the job market as a result. Life is only going to go from bad to worse for the average Russian in 2025. And when we say worse, we really mean it. Right now, inflation in Russia is running at 9.5%, which is more than double the 4% target the country's central bank has in place. When the bank announced its interest rate hikes back in October, it also claimed that it expected inflation to decline to between 4.5% and 5% for 2025, down to the target of 4% in 2026. There are a few problems with that assessment. For one, Russia's actual inflation rate is likely much higher than the central bank claims. That's according to Romir, which is a market research company that specializes in Russia. It says that year-on-year inflation for everyday consumer goods up to September 2024 was actually 22.1%. Even if Russia's central bank has the right rate for Russia as a whole, it's clear that consumer prices are rising far above the 9.5% rate being claimed. The second problem is that the central bank's predictions came before the ruble cratered. It's already been forced into an emergency action to attempt to counteract the ruble falling to over 100 against the dollar. Other potential measures will only pump more rubles into Russia's economy, devaluing the currency further, and leading to even more inflation. Russia will be very lucky if it gets down to 5% in 2025. Not ideal for Putin when he's trying to push on with his war. All of these problems for the everyday Russian could lead to social unrest at a time when Russia is already dealing with so much turbulence. And that leads us to what the ruble's crash means for Putin and Russia as a whole. It's not good news on the military front. Patrick McGovern, who's an associate of the geopolitical risk consultancy firm SRM, explains why. Russia is already under pressure to maintain extremely high levels of military expenditure, he says, and the devaluation of the ruble may potentially strain its capacity to continue financing its war in Ukraine. We've already touched on how much Putin has already pulled from Russia's National Wealth Fund just to keep his war ticking over. He's also now relying on North Korea to send troops to help him. Just what is Russia having to send to North Korean President Kim Jong-un in return for these troops? Money? Weapons? Military secrets? Who knows, other than that Russia's weakening currency is putting it in a position where it's having to rely on others to prop up its military. Imports of critical goods, such as circuits and microchips for military purposes, will become more expensive, says Vasily Astrov of the Vienna Institute for International Economic Studies. Russia will continue to buy, says Astrov. It'll manage due to higher revenues gained from its oil and from other commodity exports it trades in dollars, at least for now. If more sanctions hit home, further limiting the amount of trade Russia can do using the dollar, the ruble might fall to a yet deeper crater, leaving Russia even less able to spend on its military. This is a war that's already costing Russia around $350 million per day as of September 2023. The devaluation of the ruble means that $315 million doesn't stretch as far as it used to, which could lead to Russia's already ill-equipped troops on the front lines really starting to struggle. Speaking of those soldiers, there's another problem that the devaluation of the ruble brings with it. The money they're receiving to fight is worth a lot less now than it was. Think about what that means on the recruitment level. Russia's massive military costs are accounted for in part by the high payments Putin offers to contract soldiers. As the Moscow Times points out, Russia is in the habit of offering its contracted servicemen many times more than the country's median wage of 61,602 rubles, which was roughly equivalent to $628 in September 2024. Even that median wage has been significantly devalued thanks to the ruble's collapse. The same number of rubles is now worth a little over $575, a substantial chunk out of the pockets of the average Russian. Somebody considering joining the Russian military will see this decline and either demand more rubles to fight, costing Russia at a time when it can ill afford it, or simply not sign a contract. Either way, that's another problem for Putin to worry about. Russia's troop payments already eat up about a third of its military budget annually. If those soldiers start demanding more money for their services with the devaluation of the ruble, Russia is going to have to spend even more on Putin's war. Russia's military budget is going to balloon out of control, and that's going to spell bad news for Russia on the social front. McGovern explains how. He says the collapse of the ruble's most significant impact may be the need to redirect other federal budget resources to continue financing the war, which may lead to a degradation in public services and create the conditions for social disquiet in the long term. Russia is already having to deal with citizens who are sure to be unhappy, albeit quietly for fear of Putin's retribution, about their soaring costs of living. If even more money is taken out of the public purse to fund the special military operation, that disquiet could turn into a full revolt over time. Make no mistake, 2025 is going to be a terrible year for Russia. Either Russia will be running on economic fumes as we begin 2025, opening the door for a Ukrainian victory, or it will create the perfect storm of conditions for an uprising that could end Putin's war from the inside. But what do you think about the ruble's collapse? How far-reaching will the consequences be, and is there any chance for Russia to recover from this? Share your thoughts in the comments below, and thank you for watching the video. Now go and check out Ukrainian War Cripples Russia Forever, or click this other video instead.